So guys, leverage trading in Forex means borrowing money from your broker so you can trade with more money than you actually have. Let's take an example. An example would be, because not all of us have money, will be $100. Let's say we use $100. So your broker gives you leverage of 1:100, because while opening your account, while setting up your account, some brokers have ranges of leverage that allow you to open or to select, sorry. Yeah, so those ranges basically ranges from 1:50, 1:25, 1:100. So let's say you selected 1:100. That's what your broker allowed you to select higher. So basically now your broker is giving you control of 10,000 worth of currency. Why it's like this is because you're opening an account with $100. $100 alone cannot buy you cannot open a lot of units for you. So the leverage allows you to open a lot of units. So that $100 now is multiplied by the leverage, which is 100. So giving you 10,000 worth of ability to buy, to sell much in the Forex market. So now we'll be talking about understanding the relationship between lot, margin, and leverage. Example, we'll be seeing a standard lot, which is 1. So what I mean is that 1 is a standard lot. The other lot sizes, which are the mini and the micro, but we'll not be diving into that. This is basically just for illustration purpose. So we're using the standard lot. So the standard lot gives you 100,000 purchasing power, that's units. So 100,000 units. To open a standard lot in a 1:100 leverage now is one of the criteria you select by opening an account, no matter the amount, on a broker. So to open a standard lot in a 1:100 leverage given by the broker, it will be that standard lot, which is 100,000 units, divided by the leverage 100. So it will give you 1,000. Do you understand? So basically the margin required for you to be able to open a standard lot is 1,000. So I hope this makes sense. So this is basically the relationship between the lot, the margin, and the leverage. Now we have talked about leverage and we understand the relationship between lot, leverage, and margin. So this is my screen. This is what you'll be trading with. This is the MetaTrader 5 FBS demo account. So I'm going to be using this to illustrate and show you guys some things that you'll be regularly seeing while trading the Forex market. So on my chart, I have the gold USD. That's XAUT So you can see it here. This is on the M5. M5 is a 5-minute time frame. Yeah, so you can see gold spot. And yeah, I'll be talking about lot MP based on quote, spread, bid and ask. So that's basically it. So let's go over. Then if you want to, this is your order, yeah, a one-time order. So you can see here that it's 0.01. That is a lot. So this is a micro lot here. This is a micro lot. So this 0.01. Let's just take another example. If you want to buy this market, remember you guys, I trade only gold here. So I could still do other analysis on other pairs, but my main focus is gold. Let's just say you want to take a trade, so you have to either place a sell or place a buy. Yeah, you could come and still put in the mini lot, that's 0.1. You could still put in the standard lot, which is 1. So with each lot size comes each buying power. As you know, the micro lot comes with 0.01, which is 0.01. It comes with a buying power of 1,000 units. The mini lot comes with a buying power of 10,000 units. The standard lot comes with a buying power of 100,000 units. So this determines the amount of risk you're willing to take on that trade. And that's basically it. And here you have to just know that okay, we'll still go over that. So we're going to be talking about what a pip is. So a pip is usually the last decimal place of a price. Let me say of a price code. So yeah, we have the this is the gold chart still and 5 time frame. So I have marked out two levels to like explain what a pip is. So let me use my crosshair. This is 4096.4 and 4.28 and 4097.28. So now, when you're counting APP, you're counting it's when you count for different pairs, but we're going to be using gold. When you're counting P for the different pairs, you start counting from the back, from the decimal point area. So this is 0.28. So I would advise you to always discard the last number before you start counting. This is later, probably when you sign up for my class, then you understand better why you're discarding the last number. That's just the theory around it. Yeah, so this is 496.28. Then what you're counting is from, so this is 0.2. 0.2 now is the pipette. Yeah, but we're not going to be dealing with the people, we're dealing with the pips in gold. But with time, you understand why. So just the pipette is just a fraction to know how everything works well. Yeah. So this is 4096.28, 4097.28. So if you're counting from back, this is 6.2. After 6.2 is 7.2. That means the market moved 1 pip. So this could still be 6.5. Let me say 6.5. Okay, let me just say 6.0. And this is 7.2. That means the market moved 1.2 pips. Let's say 1.28 pips. But I'll always tell you to discard it because we're not dealing with decimal points here, so 1.2 pips. This tells you a lot because that's why the pipette is not really like significant, but you're saying that the pipette area is the 0.2, like the 2 there, it moves 0.2 pipette. That is that for the pip and pipette. Then let's go over to the base and quotes. Yeah, so for every currency and for every trading tool, we have the base, we have the quotes. So basically the base, we can see on my watch, on my market watch here, these are the symbols that you get used to it soon. Here you have the Euro USD, GBP USD, USD JPY, and XA USD. So almost every currency that's traded is traded against a specific currency. So guys, thank you for watching this video to the end. Like, share, subscribe. Expect a new video soon.